So I've had a few questions from you. When do you take profits? Okay. This was sort of one. I won't go into this one in much detail. It was about XRP. I remember when I first joined GIP, you mentioned you were going to buy some XRP. I'd actually bought it at that time from a couple of years earlier. And like this chap, I won't give his name away, it hadn't done much for donkeys. And I'd always say to people, listen, bought it for the long term, and I'm down on it. Every time somebody says, what do you think of this crypto? I say, well, I'm down on it. I'm at a loss. That suddenly changed thanks to Trump, as it has done for this chap. He says, quick glance, it's up 254%. I'm going to experiment based on 10-year hold. Anyway, so he hasn't specifically asked me what to do with this, but somebody else has, and it's related to this. Hi, Alpesh, hope you're well. Partly out of interest, I decided the stock to buy in mid-October was Toast. That's a company, not what's happened to the stock. This, I believe, was one of your intermediate term picks. Yes, it was. Remember, the intermediate term stuff is one of 4 new things we're doing on the Great Investments Program. One is the hedge fund 40% return stocks. That's hedge funds which are producing 40% per annum, and we're looking at their selections and see if they meet our criteria. Same with ETFs, same with investment banks, 40% coming out of those, and do they meet our criteria? And finally, intermediate term momentum. That's for some of those students who want things for 3 to 4 months, want that 40%, but the downside. So anyway, his question, and I knew these questions would eventually come. We didn't talk about the exits at the time of the entry simply because I said, look, get back in touch with me when it happens. So it's gone up roughly 50% in the meantime, and it has somewhat stopped rising. I'm considering what to do with it now. Should the general strategy be to sell stock if it's gone up by 40% plus? Not necessarily, and I'm going to come to the exit rules in a second. Obviously, I'm happy with the results of it, but not want to lose 20% of the value if it started dropping now. And I use that rule. Is there a slightly different rule that applies to your intermediate term investments? Yes, the major rule is this, which is when you're in profits, generally, I tend to apply this rule. Now, if it drops X, sell Y. Now, you might say, well, wait a minute, that's like a formula. Example, if it drops 10%, then sell 50%. If it drops 20%, sell the remaining. You might say, well, how do you solve that formula? What's the exact correct answer? We don't even know the exact correct answer in hindsight. Okay, obviously. So if we don't know the answer except in hindsight, how do we solve for it? Well, we solve for it based on our risk appetite. That gentleman specifically said to me that he doesn't want to lose 20%, et cetera, et cetera, et cetera. So for him, he might say, well, look, if it drops 10%, how much would I be happy selling to minimize my regret? What if it drops 20%? How much would I have wanted to have sold at 10% then? What if it drops 30%? Okay, so that's one way. Now, the other way, which is a lot more complicated, and I don't necessarily recommend it, is you'd end up then doing the technicals, because this is momentum based. You're really going to end up looking at the technicals of the particular company, and we've got quite a few like this. I've got a few more emails to answer, somewhat like this as well. And you'd look at it, I'm just going to show it in a second, and you do an analysis of a combination of both the monthly and the weekly momentum indicators. Now, I'm less keen necessarily to do that, only partly because you've already said what your concerns are. And you might say, you know what, I'm going to take 10, 20% now because I'm happy with my 40% return. And if it drops to, say, this level, I'll get rid of 50% or all of it. Or I might just keep an eye on it and sell. Now, obviously, there is a danger. We don't have hindsight. We don't know if it's going to continue, what it's going to happen. Okay, it's a lot easier when it's gone up 100%, as some of ours have, because then what you do is you take your original capital out and the rest is just gravy. Okay, so there isn't a clear answer, except that's the rule I tend to use. It's also the rule that kept me in NVIDIA during last April when it didn't drop. It was just doing exactly what this is doing. It just didn't drop enough for me to exit. I said, well, it's not dropping. I don't have to exit. And then, of course, it kept shooting upwards. So it's a good rule in that regard. Okay, so that's the general rule I suggest based on your own risk appetite. Thank you.